a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about money market ETFs. So we have seen that stocks and oil, they have been a wild ride as the war enters its fifth week. Traditionally defensive areas of the market, including gold and long term government bonds, they have also sold off, leaving very few places for investors to hide in. So that is why these very safe, ultra low risk, highly liquid securities instruments like ultra short government bonds and money market funds, they have seen a lot of interest from investors. And in fact, assets in money market funds now exceed $8 trillion. These products remain very popular with both institutional and retail investors because of their perceived safety and still attractive interest rates. Interest rates have come down a little bit from 5% to around 3.5% now. But earlier there were some concerns that these products are going to lose their appeal because the Fed may continue on its rate cutting path in 2026. But now traders expect that the Fed may not cut interest rates at all and may even raise interest rates. So investors are preferring to stay in the shortest duration of the yield curve because they remain cautious about longer duration bonds due to their long term inflationary concerns. And we know that even the Oracle of Omaha, Warren Buffett, he has accumulated a lot of cash, which is mostly invested in very short term treasury bills. Now, this ETF category has seen significant interest since Texas Capital launched the first money market ETF, and because investors like low expense ratios compared to mutual funds, and also investors' preference for the ETF vehicle. And major providers, including BlackRock and others, they have quickly followed with their own money market ETFs. Now, let's talk a little bit about money market funds, what these are. So, retail investors use these money market funds as a relatively safe option for managing their cash while taking advantage of still attractive interest rates. Most money market funds are required to maintain a net asset value of $1 per share, and their shares do not appreciate, but investors get those attractive dividends, those regular dividends at regular intervals, and that is how their investments grow over time. Government money market funds, they invest in treasury bills and agency bonds, including those issued by Fannie and Freddie. Prime money market funds hold corporate and government securities, and municipal money market funds are particularly appealing to high income investors because income earned is generally exempt for federal income tax and often state income tax as well. So, as I mentioned, investors who prefer the ETF wrapper, there are money market ETFs now available. These adhere to SEC's money market rules under Rule 2A7. Let's talk about three money market ETFs that are quite different from one another and also from different providers. So first one that I'm highlighting, it is by iShares Prime Money Market ETF PMMF follows 2A7. All these ETFs follow that SEC's rule. Let's take a look at this ETF. This has 520 million in assets, charges an expense ratio of 20 basis points, and 7-day SEC yield of 3.6%. You can go to the quote page on Zacks.com. Using the link, you can go to iShares webpage for this ETF. So they mainly, the value will remain almost stationary. You will get those regular dividends from these funds, and you can also look at the holdings. So this invests in exposure breakdown. If you look at the exposure breakdown, you will see that it invests in government agency repos, CDs, other commercial papers, repos, and government agency debt, as well as treasury debt, etc. The second ETF that I'm highlighting is among the cheapest in the space. So this is by JP Morgan, and this invests only in treasury securities. So if you want ultra safe option, that this is the one for you. It charges 16 basis points, has 60 million in assets, slightly lower SEC yield of 3.5%. And again, you can go to the quote page on Zacks.com and JP Morgan webpage and see what it invests in. So it will invest only in US Treasury securities. The third one that I'm highlighting is quite different, and this is now the largest money market ETF with 22 billion in assets, and this is the first money market ETF which is designed to meet the very strict requirement of the Genius Act. So Genius Act governs stable coins, and so this is eligible for investments for stable coin reserves. So stable coin reserves are basically a pool of assets, mainly cash, US treasuries, etc., which are held by issuers of stable coins, and they are required to back these digital tokens 1:1, ensuring that they maintain a stable value of typically $1. Again, to take a look, you can go to the quote page and using the link to Brochure's webpage for this ETF. And this invests in treasury securities. And why it has 22 billion in assets? Because it is used as a cash management tool by Brochure's in some of its ultra popular ETFs, including TQQQ Ultra Pro, QQQ ETF. There's nothing wrong in that. Brochures and other providers, they are totally justified in using their own ETF, their own money market ETF as cash management tool in their other ETFs. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.